comes from, excuse me one second. Everything that I talk about, guys, comes from this education page, right? No secrets. We're not holding anything back from you. I'm not going to give you a couple half-truths and charge you for the second half of the equation. I'm going to give you anything and everything that you need to be successful, but I need you to make a decision for your first 30 days with Nexgen. As you focus on consistency, as you're getting to know the software, learning to read the indicators, I want you to spend 30 days focusing on a high probability trend trade. And I know that sounds like forever, right? 30 whole days focusing on one thing that wins more than it loses. 30 whole days giving yourself the best chance of success. Guys, because that high probability trend trade, if you're focusing on that trade where each indicator on every chart agrees for the rules for the trade, like when the triggers are their strongest, there's no termination conditions, no trouble spots between your entry and your target. What happens is that you're teaching yourself to read your charts. Those of you that have been here for more than 10 days, you're beginning to see and understand the value of being a chart reader more than a trader, because 90% of what we do every day, guys, is just reading charts, reading indicators. You'll open up your workspaces and it's going to be uncanny. You're going to have the ability to recognize three essential elements where the market is likely to continue, and then you're going to be able to pinpoint with unbelievable accuracy entries for the high probability trend trade based on that point where the market is likely to continue. You'll be able to identify through Fibonacci where the market is likely to go. It'll help you make great decisions on profit targets. And then you'll understand where the market is likely to stop. And this is going to keep you from trading into areas that may reverse the market. And this is also these areas where the market is likely to stop, those termination conditions. Well, those become the anchor point for that 5-1 trend trade. That's your highest chance of success. So do me a favor. I want you to allow yourself to be new. I want you to say to yourself this morning, I'm brand new to Nexgen. There's absolutely no way I'm going to be a master of these indicators on day one. So I'm going to give myself permission to be a student. I'm going to go ahead and let it be new. And I'm going to focus on this high probability trend trade for 30 days so that I can learn to read my charts. And guys, I am going to just focus on simplicity. The high probability trend trade is only 3 rules. There are 3 rules that become easy to identify with a little bit of practice. And what we have here is an equation for a trade. And I'm not an equation guy, but this one really turns out to be pretty easy. A trade is nothing more than momentum, a clear path, and then an entry area. And your 3 rules are going to give you all of these advantages. They're going to identify on a large chart strong triggers, giving you the advantage of momentum. They're going to identify on that same large chart that there's no termination conditions, no areas where the market is likely to stop. And on the smaller, faster chart, we're going to find our entry area. So it's only 2 charts, and it's only 3 rules. Does that mean that you'll always have only 2 charts? Absolutely not, guys. But remember, for 30 days, we are laser focused on simplicity. We're going to use this 13.2, this larger chart, this broad stroke of a brush, to get an overall sense of what the market is doing. And you only need 1 bar, the most current bar. And with that 1 bar, you're going to be able to determine a couple things. You're going to understand what direction the market is trending. If that background on the 13.2 is green, well, guys, you're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. Only look for rules to be met for high probability trend trades short. Why not embrace that advantage of trading with the trend? Also on the 13.2, rules 1 and 2, the rules that give you the advantage of momentum and the advantage of a clear path, must be true on that chart. And when the rules are true, well, we're going to go to a smaller, faster chart. We're going to go to a 5-1 chart. What happens in the 1 bar on the 13.2 may happen in 20 or 30 bars on the 5-1. This is going to allow you to refine your entry area. You're going to take that broad stroke of a brush, you're going to whittle it down, and you're going to identify where the market is likely to continue. In your rule number 3 of 3, that entry area rule, is going to have you using a limit order. Guys, that means that you're going to wait for the market to come to you. We don't chase price. And you're going to buy or sell a pullback at an area. You're going to use Fibonacci. You're going to use these mid bands. And you're going to identify areas where the market is likely to continue, and we're going to allow them to be inside of favorable large triggers. This simple recipe, 3 rules, 2 charts, is going to allow you to reduce your risk and maximize your profit potential. So when we talk about your first 30 days, you're focusing on entries. You're focusing on taking the advantages and pinpointing your entry, because guys, this is my next coffee mug. I'll be sending them out for Christmas. Great entries. I'm going to type it into the room. Great entries provide easy management. And I'm going to misspell management because my fingers aren't as awake as my brain just yet. So guys, we're going to focus on 2 charts, 3 rules. Remember those termination conditions, the clear path? This giant red line with no trigger lines says that this is an area likely to stop the market. This big blue line with no trigger lines through it also says it's an area likely to stop the market. Have any of you ever been caught in consolidation and thought, man, the market's caught in a range? Look how easy it is to identify with Fibonacci. And when we put these 3 rules together for high probability trend trades, not only are you going to recognize where the edges of that consolidation may be, you'll understand whether or not there's going to be opportunity within to get you to that next edge, or maybe you'll be able to identify when that edge is broken so that you can regain that advantage of a clear path. So everything that I talk about, guys, you can find in the tutorial section. Are we good? Am I talking too fast this morning? I'm going to take a deep breath, guys. I'm wound up. I've had so much fun in this class for the last week. I hope you guys have too. The participation has been unbelievable, guys. I can't thank you enough for those of you that are asking those questions, that are putting yourself out there. I want you to keep doing it today while that market's moving. And let's talk about rule number 1. Rule number 1 says on a 13-2 chart that we have to have strong triggers. Strong triggers defined, guys. Here's your picture. I'm going to put it in the room. I want you to get in the habit of stealing the pictures that I put in the room, because anything that I post is probably important. In an uptrend, when your large triggers are up, they're wide, your small triggers are going to break away from, accelerate away from those large triggers, and there's going to be space between both the small and the large. Guys, it's that space that lets me know that the odds are favorable for the market to continue up. This is a strong trigger look, rule number 1 met, and the advantage provided is that the odds are favorable for the market to continue up. In a downtrend, when that background is red, small triggers break below, away from the large triggers. The large triggers are widening, they're angled in the direction of the trend. Guys, once again, the space created between the two lets me know that the odds are favorable for the market to continue down. Rule number 1, providing that advantage of momentum. When those small trigger lines break back inside of the large, this is what we call a weakening of the large triggers. And guys, a weakening means that anything can happen up or down. Advantage lost. So for my new users looking to get the absolute most, the highest probability, embracing this odds favorable momentum is going to give you that advantage. And you're going to understand quickly that the advantage doesn't present itself from start to stop. There's going to be a range within a move that gives you that odds favorable from where the smalls accelerate away until they return. And you'll notice, and we're going to go back and look at this right now, when there's odds favorable momentum on the 13-2, from time to time, you're going to see these tails, these wicks, whichever you prefer to call them, on the 13-2 chart. Guys, this is a potential entry on the 5-1. This is a pullback on the 5-1 for continuation with that odds favorable momentum. You see it to the upside and you see it to the downside. So one of the things that you have to do as a brand new user is you have to develop trust, right? You have to develop trust in the rules. And in order to develop trust, you're going to go back and study it. So guys, I'm going to pull up a 13-2 chart. And I'm only going to put trigger lines on it, okay? And we're going to start taking a look. We're going to look for instances where the smalls are below the large, where the large are wide, they're angled in the direction of the trend. And if you see a tail, we're going to circle it because it's a potential entry on the 5-1. Is everybody with me on the look? In a downtrend, give me a Y in the room if you are. Smalls below the large are wide, they're angled. Circle that tail, guys. This is how you're going to study. This is how you're going to develop trust in the methodology. This is how you're going to develop trust in the advantages. Look at that. Smalls above the large are wide, they're angled in the direction of the trend. I'm going to circle that tail. Guys, that market didn't blink forever. And this is all you're going to do. If you're a brand new user, I want you to scroll back all 10 days. And I want you to circle each and every one of these tails. I'm not going to go that far back. But this is the gist of what we're doing, guys. This is your study. You're establishing trust. And now I'm going to put indicators back on. And as these indicators come back on, we're going to talk about recognizing the advantage of a clear path. Rule number 2 says don't trade into a termination condition. Remember that when we're looking at that equation, when we're picking the best of the best for you guys, we've already established momentum, right? Advantage 1. So now we're going to recognize the advantage of a clear path. And that advantage of a clear path comes from the recognition of termination conditions. And a termination condition is simply a Fibonacci-based indicator that may reverse the market. And we're going to use a simple comparison of the areas and those T3 trigger lines. So I'm going to pull up this picture straight from the user guide. Same picture you could study each and every day just to make sure you're good with it. In order to identify a termination condition, like we did this morning in the live market there with crude, price is going to reach an area, whether it's Fibonacci resistance, Fibonacci support, 1-to-1s, divergence highs and lows. But when price comes down and reaches an area, I want you to ask yourself, where are the trigger lines? Well, if the trigger lines are not below support, don't take any trend trades. You've reached an area that may reverse the market. So give me a Y in the room if you're with me. Price reaches an area. If the trigger lines have not broken that area, it's an area likely to stop the market. No more short trades, right? Pretty easy. Advantage lost. So let's put a stop sign. Price reaches that support, the triggers remain above. Price reaches support, the trigger lines remain above. So when is an area broken? Well, an area is broken when both the small, whoops, that's the wrong direction. When both the small triggers and the large triggers get below that area of support, guys, now this area is considered broken. Now I can start looking for those trend trade rules. Support begins to act as resistance. The small breakthrough, the large breakthrough, we now have the advantage of a clear path. So once again, I'm going to ask you guys, give me a Y in the room if you're with me. And if you're not, it's okay. We'll talk about it more and we'll find more examples. Trigger lines break the area. We now have the advantage of a clear path. Fantastic. So guys, there's one more that we're going to look at. We're going to talk about an area with the potential to break because this is a scenario that happens quite a lot. When the smalls are through, but the large are not, the area isn't broken, but has the potential to break based on odds favorable momentum. You're going to hear me say that a lot. Based on odds favorable momentum, guys. That momentum should be the catalyst for everything that you do. When the smalls smash through that area of support, but the large haven't made it through yet, this support becomes an area likely to break. It has the potential to break, but it has not broken. Does that make sense? Price reaches support, no trigger lines through. no trades. All trigger lines through. We have a clear path. Smalls through but large above. This one has the potential to break. We're going to gauge the momentum on our charts, and when we talk about entries, we're going to make sure that we have a beautiful entry possibility, because look, you'll see there's one of those tails right there on an area with the potential to break with all that momentum. So 3 ways to look at areas: broken, not broken, potential to break. So far so good. Which one gives us the advantage? The clear path. This is your high probability advantage when both trigger lines make it through the area. Remember, we said that 90% of what you're going to do is going to be reading indicators, right? Waiting for those advantages, waiting for that clear path, waiting for that momentum so that you can take a rules-based trade that's been known to win more than it loses. So let's just go through a little review. Price reaches resistance. The trigger lines remain below. Do we have a clear path? Yes or no? Wire in. What do you think, guys? Clear path to the upside? Price reaches resistance. Absolutely no. So no long trades, right? Good job, guys. You just kept yourself out of a loser. But then price is coming down and the smalls are below the large. It reaches support and absolutely no trigger lines break through. Do I have the advantage of a clear path? No. Perfect, Ziba. So what does that mean? That means that 90% of what I do is reading my indicators, being patient and waiting for that best of the best opportunity. Price pulls back up to resistance, a divergence high and another resistance. None of my trigger lines break through that area. So now I have what's called a pivot stop out. A pivot means the market went up and down. And that's exactly what happened here. The price goes up, the price goes down. The little peak of this triangle is what we call the pivot. Well, it had a loss of momentum, so I see a divergence high. When price comes back and sees it again, it exceeds it by a few ticks. But it can't continue. The trigger lines can't break it, and we get a full reversal. Guys, this is what we call a strong top. When you have a termination condition that creates a full reversal, guys, that is your strong top. That is your best of the best. That's your first 30 days. Remember I said that we could identify areas likely to stop the market as an anchor point for that highest probability trend trade? Well, this is it right here. Focusing on those trades that happen after a termination condition on the 13-2. When we get that odds favorable momentum, when the areas are broken, that's your best chance of success. And on the other side of the coin, here's a strong bottom. Here's price with odds favorable momentum coming all the way down to these 1-to-1s. And when they reach, all of the trigger lines remain above, so I know without question that this is an area with the potential to stop the market. It may not, but since my triggers are above, I'm not looking for that short trade. This termination condition creates a full reversal. My large triggers go from red to green, and it gives me small triggers above the large triggers when all of them are above that area of resistance. Guys, there's one of those circles once again. This is the potential entry for the absolute best of the best trade. Are you with me on termination conditions? So now I've got my areas back in the market, right? You want to see how your rules keep you safe? No long trades, it didn't go up. No momentum, not looking for a short trade. No long trade. Even with odds favorable momentum, our trigger location versus support let us know this is an area that may stop the market, and it sure enough did, didn't it? Comes right back to resistance and right back to that divergence low. Guys, you're watching crude oil absolutely fight it out. You're watching deep pockets investors battling for supremacy right now. As a Nexgen user, you have the amazing advantage of saying, you know what, this Fibonacci area hasn't broken in 2 hours. And saying to yourself, this Fibonacci area hasn't broken in 2 hours. I'm going to give myself the advantage of a clear path. I'm going to let one of these areas break. And then I'll look to resume the trend. Then I'll look to take trades either in the direction with momentum, with nothing in the way, or I'll just wait for the next area to break. Does that make sense, guys? These shenanigans started at 8:11. It's now 9:28. Do you know how many traders get chewed up in these sections? And now you guys don't ever have to worry about that again. You can wait for rules met and keep yourself right where you need to be. Whoops. So let's go back. We know that there's nothing there, right? Here's one of those tails with odds favorable momentum. Do you see how the smalls are below the large? The smalls are through the area. The large are smashing through. Potential to break. And guys, there it is right there. There's your circle. If you scroll back just a little bit, here's another circle with odds favorable momentum. Guys, once again, the smalls are breaking through. The large have not. They're way up here. But we're going to see what that looks like when we talk about entries. Here, price reaches resistance and my trigger lines haven't gone through yet. It's okay to say to yourself, I don't have a clear path. I'm going to lose that circle. This isn't a trade that I'm going to take. Are you guys with me on the process? Smalls below the large are wide. They're angled in the direction of the trend. Guys, price has not reached support. Rules 1 and 2 are met. Give me a Y in the room if you're with me. We have the advantage of momentum and the advantage of a clear path. This is the basis for every high probability trend trade. We see it again up here, right? So we're going to circle those tails. And now we're going to talk about what to do with those circles. But before we talk about what to do with those circles, I want to talk about one more potential termination condition. Sometimes the market doesn't make an area. Sometimes it clears that area of support. All the triggers get through. You're like, I have a clear path. Sometimes you have odds favorable momentum and a clear path. Well, we can use one of these termination conditions, and this is the only one that I'm going to look for on that smaller, faster chart. This is the only line in the sand that I'm not going to cross as a new trader, and I'm going to see it on my 5-1. And it's 3 divergence in the same price range. Guys, excuse me just 1 second. I'll be right back. About that. Appreciate your patience. 3 divergence in the same location, guys. This may terminate a trend. You notice how every picture we're taking is right there in the educational material? Every picture is right there for you to go back and study. What is divergence? I want to talk about that. When price comes down and makes this pivot, remember a pivot means that the market goes down and up, or the market goes up and then down. It's just a pivot. When this negative number prints, when this cyan divergence line prints from a low, or this magenta divergence line prints from a high, all this means for you as a next-gen trader is that the momentum of the market isn't following price. Price made it all the way up to create that pivot, but the momentum behind it is waning. It's not following along. So when this happens 3 times, 3 negative numbers, 3 divergence lines, it may terminate a trend. You're going to recognize this on the 5-1 as an area that may stop the market, that may turn it the other direction, even for just a little bit. It becomes even more powerful when your small triggers work their way inside of the large. Does everyone remember that lesson? Odds favorable momentum, even on a 5-1, anything can happen. So now we've gone 3 losses of momentum and we have anything can happen triggers. Guys, this is a great tool to identify change happening on that larger chart. And you'll see this. Maybe the market's trying to create a low, but you don't see it on the 13.2. But those 3 divergences on the 5-1 let you know to stop taking shorts. Sometimes you have odds favorable momentum and nothing in the way on a high, but those three divergences at the same price level on the 5-1 give you that heads up that maybe it's time to stop looking for those long trades because the market may terminate. So this is the only one on an entry chart that we're going to look for in regards to a termination condition. You're also going to be able to use this three divergences, guys, as you grow outside of that first 30 days, as you grow outside of that high probability trend trade, you're going to begin to take medium probability trades. And guys, you're going to embrace these because this is going to be the vast majority of your trades. And this is when most of the indicators line up for a trade. However, a small issue exists. Your ability to read your indicators, to read your charts, that skill set that you built in the first 30 days is going to have you it's going to allow you to see that potential problem, that small issue. You're going to take them, you're going to execute, and you're going to manage assertively. Your ability to read your indicators will allow you to manage assertively. And if there's trouble in your way, you guessed it, your ability to read your charts is going to identify that trouble. And you're going to be able to take off a portion of your position at that spot. You're going to be able to get to a zero loss level. Hey, good morning, Cal. Nice job. You got pictures going. Right on. I love it. So guys, we're focusing on high probability to get us to medium probability, right? Well, we've got momentum. Where's that picture? What's our equation? Our equation is momentum, rule number 1, strong triggers, right? Clear path, making sure that we're not trading into a termination condition. And then guys, this is where the magic happens, the entry. On the smaller, faster chart, using a limit order to buy or sell a pullback at an area inside of favorable large triggers. And I want you to write that down, and I want you to remember that. We're going to use a limit order. What does that mean? The market comes to us. We don't chase the market. And we're going to buy or sell a pullback, and that's just a small retracement in price. If everything's going up, we want it to come down. If everything's going down, we want it to come up. And we're going to do it at an area inside of favorable large triggers. So I'm going to put that in the room for you right now. This is going to give me the advantage of an entry area. And when the rules are met on your 13-2, this is what your 5-1 is going to look like. It's going to have an awful lot of up bars in that uptrend. It's going to have large triggers strong, angled up like a shark about to breach. And your job is to identify areas. What's an area for a high probability trend trade? It can be Fibonacci, support or resistance. Call it fibs, it's easier. News in 10 minutes, thanks KR. It can be a mid-band, or it can be one-to-ones. So all I'm doing, I've made the decision because the rules are met, because I have the advantage of momentum, because I have the advantage of a clear path. I've made the decision that it's time to take a trade. So I'm identifying these areas, and I'm seeing how they line up with the large triggers. But my rules say that I'm going to buy a pullback. What's a pullback? A pullback is a little retracement in price. And that small retracement in price is counter to the underlying trend. And this picture really sums up what that pullback means to us, guys. Remember, we're trading with the crowd. We're trading with the majority. We're trading with the big pockets. Let me hit copy and give this to you in the room. The crowd, the majority of the market, has provided us momentum. The crowd has provided us no termination conditions. They don't see any lines in the sand. So when these guys say we're going up, when these guys say we have momentum, we're going to let this little group of yahoos that likes to fight momentum and trend get us back to our entry. And believe me, there's yahoos in every group. And it begins with a reversal bar, guys. It begins with this down bar after all of these up bars. This is where you're going to create your window of opportunity. And we'll talk about this in depth today. We got a lot of great pictures from the last couple days. When the reversal bar prints, Your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. What does that mean? That means that these areas are going to be below the top of the triggers and above the bottom of the triggers. What's a favorable large trigger? Your large and your synthetic are one on top of the other. They are going in the symbiotic relationship together, overlapping. And we're going to identify the areas that fall within them. And that's going to be our point where the market is likely to continue. So from this midband to these one-to-ones, they're going to fall inside of these large triggers that are coming up. Ziba, do me a favor, repost that, but take my name off of the end of it. But the answer should be Ziba. On your 13.2, I want you to right-click, because I think I already know what it's going to be. And I want you to go to Templates and Load. And I just want you to reload the template. 13.2 Rinko 2023. Click OK. And let that thing repopulate, and it's going to give you a fresh start there. Let me know if that helps. Don't run tick data, Gary. That's the best that I know. So guys, reversal bar. Window of opportunity. Guys, we have a tech department. Ziba, show me the picture so I can see what you're looking at. Gary, I'm not sure, bud. Go through, start fresh. Gary, you've got synthetics, which means that you're putting too much on there. So run over to the traders chat room, Gary, and say, guys, what are the settings if I'm running NinjaTrader 8 and looking at NinjaTrader 7? Because right now, if you have all of these synthetics, you've got too much data, and that's your challenge. All right, so from the highest point of support to the lowest point of support inside of favorable large triggers, guys, I'm going to activate a limit order. And this limit order is going to wait for the market to come to me. And guys, if you're posting questions right now, I'm going to get to you, I promise. Hey, Cal. But I'm going to complete my little stream of thought here because I get distracted and I don't want to confuse anybody. Reversal bar prints, window of opportunity from the highest point of support to the lowest point of support. Guys, activate your limit order at the top of that window. Remember, because we have odds favorable momentum on the 13.2, because we had nothing in the way on the 13.2. And guys, remember that tail that we circled on the 13.2 chart? There it is right there at an area of support or resistance inside of favorable large triggers. You're now in a long trade. And you're in this long trade with the advantage of momentum, the advantage of a clear path, and now with the advantage of entering where the market is likely to continue. All of that chart reading coming together to get you into the market. Your initial stop will go below that window where the market should not go. Is everybody with me on the entry? Reversal bar, window of opportunity. We're getting in at the top of the window because of the momentum on the 13.2. Initial stop is below the window because that's where the market shouldn't go. And guys, I'll take this trade 1,000 out of 1,000 times because of those advantages. And this is a trade that if you focus on your entries for the first 30 days, this is a trade that typically wins between 70 and 80% of the time. This is a trade that creates confidence through the memory of success. This is a trade that teaches you to recognize momentum in the moment, that gets you identifying termination conditions right there in the moment, and that'll have you pinpointing with accuracy where you're most likely to continue that trend. Guys, this is your high probability trend trade. And when we talk about those tails on the 13.2, we don't know where the tails are coming from on the 13.2. Remember, this is a study tip to go back to recognize the rules being met. But if the rules are met, 13.2 has odds favorable. 13.2 has no terminations, just like we circled together as a class. If it lines up on the 5.1 with an area of support or resistance inside of favorable large triggers, well, guys, this is your study tool. This is how you're going to recognize that high probability trend trade and build trust in it. All right, Ziba, you said that you right-clicked. No worries. I didn't say anything for a second. Can you hear me now, Ziba? Guys, can you hear me in the room? Give me a Y in the room if you can hear me. Yep, okay, good. Sometimes I have to breathe. It takes a second. We're good. Let's talk about entries, and I'm going to come back and answer your question. What's an entry? Ziba, this is going to answer your question. An entry is where you got into the market, right? That's all it is. An entry means that you entered the market, just like the entry to your home is the front door. Just like the entry to the beach may be that gate right up to the sand. So an entry just means that you got in. That's all it means. You entered the market, Ziba, at this price level right here. You also entered the market here. Well, you did. Nice job. What I don't see is exits. So Ziba, take a picture of both screens. Show me what they both look like. And let's see what you're doing. That's okay. Keep playing, though, because that's how you get good, right, guys? Is practicing. But make sure that you're practicing the right rules. Let's go to the 13.2. Remember, we circled some tails, didn't we? Let's go find one of those circles. Right here, right about 7:40 a.m. I'm going to scroll back on my 5.1. And here we go. Two circles. Both pulled back to resistance inside of favorable large triggers. Guys, give me a Y in the room if you see it. Two circles, both of them pulled right back to areas of resistance inside of favorable large triggers. All right, Ziba, I'm going to slow you down just a second, okay? We're going to have a deal with one another. And guys, this is for everybody in the room. Take a deep breath. It's important. This is so important. Every time you show me a picture, I want you to write something on that chart. If you have a question about what you're seeing, I want you to write it on there. Because what happens is if you post a picture and then 10 people post, I'm going to miss your question if it's not on the chart. So every time you snap a picture, I want you to tell me what's going on. Ziba, you're not on the most current bar here, right? We talked about this yesterday. If you want to see more, grab that bottom. You can tighten and you can compress. If you can't see the most current bar, and how do I know it's the most current bar? Because it's highlighted in black. So guys, if you're looking at your charts and you don't see that price highlighted in black, this white arrow up at the top lets you know that you're not caught up with the market. The market's trading at 77.04 here, Ziba. You can only see 77.18 up here at the top. So you need to click that white button so that it stays current. If you need it tighter down here on the horizontal, click it, move it to the right a little bit. It'll tighten things up. But this is stuff, guys, play with it. How do I make it bigger? How do I make it smaller? How do I do this? How do I do that? If I tighten it up and squish it, capital F brings it back. Practice this stuff over and over so that it becomes second nature. But what I want to do right now, guys, is let's talk entries, okay? I'm going to get rid of this, and I want to do this together as a class, and I want you guys to work with me. Let's look at the 13.2 together. Guys, on the 13.2, do I have odds favorable momentum? Do I have small triggers below the large triggers wide angled in the direction of the trend? This is from crude oil this morning, guys. Yes? Absolutely, right? So rule number 1 has been met. I now have the advantage of momentum. Rule number 2 says that I have to have the advantage of a clear path. Has the price bar reached an area? Has it hit a fib? Has it hit 1-to-1s? Has it hit a divergence low? No, CJ. So CJ, do I have the advantage of a clear path? Yes. So on one bar, I've determined that the market's in a downtrend. I've determined that I have advantageous momentum. And I've determined that I haven't reached an area likely to reverse it. My rules are met to turn my attention to the 5-1 chart. And on the 5-1 chart, this is my look, right? Large triggers are coming down. Price bars are going down. And I'm thinking to myself, I need an entry, but what am I waiting for? New users. What has to happen on this 5-1 chart in order for me to build my window of opportunity? Everything's going down. Large triggers are coming down. Price is going down. Everything says this market's likely to continue. And I feel like I'm getting left behind, right? Oh my gosh, how am I going to make money if I'm not allowed to jump in? There's my reversal bar. Remember, this is where the small crowd says, I don't care about momentum down. I don't care about no termination conditions. Hell, I don't even care that we're in a downtrend. I'm willing to lose a little bit of money to try to push this thing back up. Or maybe they're taking profits and it makes the market spike a little bit. So at the time of this reversal bar, you ready to create our window of opportunity? The first thing that I want you to do is just look at those large triggers from the top of the large triggers down to the bottom of the large triggers. And I want you to remember, those large triggers are working their way down, right? They're like a shark just cruising through the water with tons of momentum. Is everybody with me on this? I've identified, and we'll keep it accurate, in the moment, the top of the triggers to the bottom of the triggers. Our window of opportunity is from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Give me a Y in the room if you're with me on this. From the lowest point of resistance to the highest point of resistance inside of favorable large triggers. My rules say that I'm going to activate a limit order a couple ticks below that lowest point of resistance. Cal, because that's the area where the market is likely to continue. The market is likely to continue from an area inside of favorable large triggers. How do I know that? Because I have 30,000 pictures at my disposal that support that notion. Because I've gone back and I've studied it, and when my 13.2 looks like this, I know that this is my best chance of success. And watch what happens after that reversal bar. The large triggers continue down. Now this resistance is inside of favorable large triggers. Awesome. Here it comes. Congratulations, guys. You are now short at 77.26. What does short mean? It means that you sold the market at 77.26. And let's do this. Do we have the equation right? A trade equals momentum, a clear path, and an entry area. These advantages, this equation comes from strong triggers, no termination conditions, and an area inside of favorable large triggers. Does everybody see how we've met the rules? How the equation has been fulfilled? And now we're in a trade with these advantages. We're in a trade that typically wins more than it loses. And we're in a trade There we go. It overruns a little bit, right? Inside of favorable large triggers. And what's it do after? Well, that's not so bad, is it? What do you think, guys? Click the red X, Zeba. Click the red X on the entry. So if you have an entry just waiting, click that red X. Well, then click close. And that'll get you out. If you're in an order, if you're in a trade already, clicking close will exit. Awesome, perfect. So Zeba, that means that you're probably not working with stops and targets, right? You don't have your ATM strategy put together. Stop playing, Zeba. Thank goodness my spine surgeon wasn't just playing, right? Practice like you want to play. Practice like you want to perform, Zeba. So it'll be easier for you. Good morning, Safia. It'll be easier for you if you build an ATM strategy, because then not only can you practice getting into the market, that's why you're in this classroom. All right, I understand. But what you're learning right now, it's okay. What you're learning right now is getting in the market, but if you don't have an ATM strategy in place, well, then you don't have stops, right? You don't have targets. It becomes difficult. So let's do it the way you're going to do it when you are trading for real, and we'll start building those good habits. Sound good? And I like that you're playing with it. But first, everybody give me a Y in the room if you understood that entry, that high probability trend trade entry. Cool. So when we enter a trade, we need stops and targets, right? If it says none right here, guys, and I get into the market, I don't have a stop protecting me. I don't have a target. I don't have a goal. And I'm just kind of flying blind, and that's a horrible way to do it. So what we're going to do is I'm going to click these three little buttons. And Zeba, I want you to do it with me. And guys, if you don't have an ATM strategy, I want you to do it with me. I click the button, and let's go order quantity 2. Let's trade 2 contracts in this market. Everybody with me? That means that when I get into the market, I'm in control of 2 contracts of crude oil. So you can set your targets, D. Let's go custom. See how when you put custom, it defaults to 3 targets, but only 1 has anything in it? So when I click on the second target, Gary, thank you. Now I'm working with 2 strategies. So I'll put 1 contract on each target. Does that make sense, guys? Order quantity 2. My first contract is 1, or my first target is 1. My second target is 1. Guys, a great place to start, 12 to 14 ticks. Zeba, because it's giving us more options. Gary, I got this one. Thank you for the help, Gary. Let me do it so they don't keep looking. You're pulling a John Novak right now. Zeba, we're doing 2 just because. No other reason. 3 little dots. When you click it, up comes the ATM strategy. We can do 2 contracts. You can do 1 contract. I mean, goodness, you could do 50 contracts if you want, but the reality is all we're doing right now is we're working on entries. So I've got 2 contracts and 2 targets. My stop loss will be 12 on both. And that gives me room to move it. if I need to adjust it outside of that window of opportunity. And let's say that just I'm going for $100 on my first contract, and I'm going for $200 on my second contract. Guys, your ATM strategy works in ticks. It works in the increments that the market moves. So 10 ticks in crude is $100. 20 ticks in crude is $200. Because, Cal, it gives you time to move it where the market shouldn't go. 12 to 14 ticks. It's an arbitrary number, but it gives me time to move my stop to the place where the market shouldn't go. Because when I enter a trade, my stop needs to go below that window of opportunity initially, and 12 ticks gives me time to make that adjustment. So my profit targets are in. My stops are in. I've got 2 contracts. I've got 2 targets. I'm going to right-click out here in the gray area, and I'm going to manage my ATM strategy, and it's going to have me name it. And guys, this is for my crude oil, so I'll put CL. And I'm trading 2 contracts. I'll call it 2 lot. And I'll click Save. And I'll click OK. And now I can go to my drop-down menu under ATM Strategy. And I can highlight CL2 lot. And now when I get in the order on CL2 lot, if I enter the market, let's say I sell, my protective stop is above the market. My stop, or my targets, are below. And guys, this isn't a real trade. But do you see how my stop is above, my targets are below? If I click that stop, I can adjust it maybe above the pivot where the market shouldn't go. If I click my target, I can move it maybe to my first trouble spot, right? If price reaches either my stop or my target, watch this. That target's closed out. I'm out of the trade. If it's appropriate to reduce risk, I can reduce risk. So guys, this is stuff to practice. I can put a target right at Fibonacci support. I can move my stop to break even. I can do all of these things. And this is how I need to go. So D, it gets to the second target because remember, it's 2 contracts, right? And look what we did here. I'm going to hit close, guys. We entered 2 contracts. See that right there? 2 at 76.96. This is where we got into the market. Our first target, it closed 1 contract at 76.95. We made a whopping $10. But remember, 1 contract stayed open. And that second contract was taken off at 76.92. So 2 in, 2 out, but because of our ATM strategy, D, we had our first contract getting out at 10 ticks and our second contract getting out at 20. So when you get out of the first contract, there's still 1 active contract looking for that second target. Does that make sense? Awesome. So guys, if you don't have an ATM strategy put into place, I want you to put an ATM strategy in place. I want you to practice this. And Gary gave us the link. Thank you, Gary. But guys, here's the 100% get you where you need to be instructions. Remember, I'm going to give you a fish every day. Ziba, no, I won't, because I don't trade live for a classroom, because my job is to teach you to read the indicators. Everything that I just did is exactly what you need to do. This isn't a trade. You need to enter. If you want to go short, you're going to sell with a limit order. If you want to go long, you're going to buy with a limit order, right? Once you're in the trade, let it run. Don't worry about anything but entries. But Ziva, I can't take live trades. I can't call live trades. It's against the law. I could get fired. We could get fined. But what you can do, Ziva, is you can go to the tutorial section. I can take a random craziness and show you how to move stuff. Where's the trade entry? Management techniques. Let's see if this is the one I'm thinking of. That's not the one. I've sent John a message asking. No, D, you can't. Guys, okay, here we go. Hypothetically, if I get into a short position because everything says down, not a real trade, not rules-based, I'm not telling you guys to take this trade. Ziba, you're in the trade, right? And that's a horrible entry because it's not a rules-based trade. Your targets are at 100 and 200. Your initial stop is outside of the perceived window of opportunity. Here's resistance inside of triggers. The initial stop goes outside of those large triggers where the market shouldn't go. Are you with me? My first target, I'm going to just move it right here to these 1-to-1s. D, do you see how I'm in 2 contracts? If the first target gets hit, and notice we have momentum. First target's been hit. And now I have 1 contract active. I can move my stop. Maybe I want to go to break even. Maybe I want to be behind a reversal bar. And again, this isn't a real trade. Maybe I want to just keep it in place. But if I click the line, I can move that stop anywhere I want. You guys good with that? So when the target is reached, it exits 1 contract, and that was from 92 to 86. That was $60 down to the 1-to-1s. My second contract is all the way down here, right? So one of 2 things are going to happen. It's either going to come up and hit my stop, or it's going to go down and hit my target. So I'm going to put my target closer, and I'm going to put my stop closer. And it's either going to hit the target or the stop, right? Guys, this is how you stop the market in its tracks. Because I entered with 2 Ziba, but I've already taken profits on 1. So I'm only in 1 contract now. If it hits this green line, I'll be out of my second contract that entered at 76.92. If it hits this red line, well then my stop was hit, and I'll be out of the contract there. There we go. It hit my second target, and now we're out of the trade, right? And now we're called flat. Flat means that you're not in a position. You're not long or short. There's no open positions. So Ziba, we entered with 2. The first target was hit, which put us down to 1 active contract. The second target was hit, which flattened our position. Does that make sense, guys? Does that help? Don't be sorry. It just takes practice, Ziba. No worries. So let's do this. Smalls are below a little bit. I'm sorry, Rachel. Have you talked to tech? Have you gone in and spoken with Jason? All right. So that should be your first course. If you're having a lot of troubles, guys, I'm always sympathetic over here, but Jason's the guy that can fix it. So put in that tech ticket. Put him to work. Absolutely. And guys, you can see what just happened in the market. We lost momentum, right? We also lost momentum on a smaller chart. The smalls are inside. And it blew right past that area inside of favorable large triggers. Because rule number 1, we lost that momentum. And if I put my indicators on here, I bet there's probably a line Maybe a termination condition. So Zeba, right now, the only thing that I need you doing is focusing on having those advantages, right? Having the advantage of momentum, having the advantage of a clear path, and look at that, straight to a blue line. And then when the rules are met, Zeba, and they're not yet, let's see if they are on the S&P. Nope, termination condition. Let's say hypothetically you're looking for a long trade. There's no areas. I could right click and I could have a limit order waiting for the market, right? And I'm saying if the market comes down to this line, then I want to be in a long trade. Let's see if we can help it. Oh, totally missed me. Well, guys, that example didn't work because I wasn't quick enough. Absolutely, and 3 divergences may terminate a trend, right? So D, what are you looking at? You're looking at support with absolutely no triggers through, right? Termination condition. You're looking at support, 3 divergences, termination condition. And I'm going to try and get hit here. Whoops, I didn't have an ATM strategy. If I get into the market, once again, I didn't have an ATM strategy. This is the S&P, and I do my S&P 2 lot. If I enter the market, my first target, my second target, and my stop. My stop goes below the large triggers, below the window of opportunity, right? It never looks as good on your platform. If it reaches 40.42, my first target is reached. Guys, this isn't a trade that I would take because my smalls are below the large. If it reaches this one, which it probably will, because I don't have the advantage of momentum, it takes me out of the market. But having those stops in place says, if the market pulls to here, I no longer want to be in that trade, right? I no longer want to be risking my money because I don't have the rules met. I don't have the advantages in place. So Zeba, what you're practicing right now is getting your order in the correct spot for an entry, right? Not worrying about anything else, just focusing on that entry. The best of the best, making sure that you understand how to get into the market. And I'm asking John, he's going to send me a link to a video that's going to help you guys out. But I'm going to leave you with the S&P right now, and let's see how this termination condition reacts. No rules met, right? Can't go long, can't go short. And guys, I'm going to get this nonsense off of my screen. One of the things that I hate to do, I love teaching ATM strategies, but I hate for someone to walk in wondering why I'm in a negative, why I'm doing silly stuff, when I'm not actually doing it other than a lesson. But that's simulated money, so it makes it easy, right? Guys, we're going to come back. We're going to talk about those entries one more time, focusing on what's important in the beginning. When I come back, we will continue. We'll start looking at the charts that you guys are posting, and then we'll go through and we can do more entries, right? If we see potential entries, well, then it's okay. We can talk about windows of opportunity, but this is right now termination condition, right? You see a termination condition below. Pivot stop out, divergence low, no triggers through, triggers are above support. Not looking for a short trade. Guys, I'll be back in just a minute. We haven't reached an area. We have not made it to one-to-ones. How do we figure out a potential window of opportunity, guys, from the highest point of the triggers to the lowest point of the triggers initially? And then we're going to squish that to the lowest point of resistance and the highest point of resistance. Does everybody see what I just did there? I gauged on the 13.2, and then I looked right, and I looked for areas of resistance inside of favorable large triggers, and I activated a limit order. So Ziba, this is what you need to be practicing right now. Right-clicking on that chart and putting a sell order in place when everything says down, and then I want you to take a picture. And I want you to use the call out, guys, and I want you to identify why you did that. And I want you to reinforce why you do what you do every time you do something, okay? Because the more you do things without purpose, the more you do things just to not be bored to do stuff, you're creating habits, right? Guys, this is what we call a pre-trade picture. A pre-trade picture will help you see where you're at in regards to understanding the software, to understanding the rules. And every time you post that picture, then you're able to get feedback. What do we see on the 13.2? Price pulled all the way down to one-to-ones, right? How many trigger lines went through? We identified a window of opportunity. What rule did I break? Got anybody? What rule did I break? Let's put the stop outside the window of opportunity, right? Does anybody see it? What part of the equation did I leave out of it? Termination condition. Absolutely. That's okay. Trading directly into a termination condition, an area likely to stop the market. Guys, more often than not, this is an area that's going to reduce your chances of a win because the one-to-one is a termination condition. I don't know what's going to happen. And guys, this isn't a trade that I would take. Sometimes the market will give you a winner into a termination condition to teach you to break your rules, right? Sometimes that trade will go up $125, $150, and you start getting excited. I'm going to trade into every termination condition I've ever seen. But I don't have the advantage of a clear path, do I? But if you're a brand new user, the only thing that I really want you worrying about was everybody able to recognize the area of resistance inside of favorable large triggers? Because honestly, that's what I want you guys to see. Because that's your focus for 30 days, right? Your focus for 30 days is being able to identify where the market is likely to continue. Once again, probably not a trade that I would take live because of a termination condition. I'm not willing to risk that. Does everybody see how one contract has been removed because the profit target was hit? Watch this. I can move my stop to my entry price, and now I'm break even. So all we're doing is we're talking about how to find your best of the best entry, what it looks like when your first target is hit, how you can move your stop. Look at this, guys. Break even plus one. Nothing bad can happen to me, right? I've got $100 in the bank. My stop is break even plus a tick to cover commissions. And I know that I've given away the advantage of a clear path, right? So what I want you to do is if you take this trade with that picture, I want you to take a second and I want you to type in Did not have rule 2 met. Gave away advantage of clear path. Why do I want you to do this? Because I want you to realize that it's so important to understand when the advantages are gone. And guys, look what happens. You get a higher divergence, the trigger lines go up. If you don't know how to come in and take this trade, you probably still have your risk way in a crazy place. You're not identifying change on the smaller chart. But do you see how that best of the best entry at an area inside of favorable large triggers made a lower probability trade, not a high probability trade, but a lower probability trade manageable? That's where you're going, guys. That's where you're headed. You're headed to being able to read your indicator so much that you can say, when I have momentum, I can take some chances. I can go outside of that highest probability and still make money. Does that make sense, everybody? I broke rule number 2, but because of my great entry, because I focused on entries for 30 days, because I recognized change on a smaller chart, I was able to manage assertively. And guys, that was a $110 trade, or $112.50 for a couple seconds of my life. That's what we're focusing on, chart reading. What do you guys think? Just takes repetition now. So second half of the class, let's start looking at some of the pictures you guys have posted today. That's one of the best parts of my day, is coming in here and just seeing what you guys are doing. Gary, you said you almost missed a termination condition. All the way down to that divergence low, none of the trigger lines go through. You chose to stay out of the trade. Nice job. Great chart read, right? Not giving away that advantage. Termination, third divergence in the same location, right? And guys, I don't know if you remember, but the crude oil shot up from 3 divergences in the same location. Gary, once again, great read, great chart reading. Just making sure that you're getting the most out of your indicators. Cal, I love that you're posting pictures. Nice job. Practice writing on them, guys. Practice writing on those pictures. Gary, termination condition. Termination condition. You're just waiting, right? It's either going to go up or it's going to go down, but until you have the advantage of a clear path, you don't have to guess. I love it. I love it. And then Gary knows that the more you post. Did you miss a market flow signal? So Gary, you had a 50-50, right? This is a great question. You had smalls below the large were wide. You had a pullback to an area inside of favorable large triggers. And Gary, is a reversal bar with a magenta arrow above it, is that a reversal? Is that a market flow signal? And guys, if you're asking yourself the questions, Gary, the answer is absolutely. That was a market flow signal from the area with the potential to hold on the area with the potential to break. But if you go back to market flow volume analysis, there it is right there, Gary. Zeba, that is what you're going to look at in about 3 months. After you get so good at high probability trend trades, you're probably going to add another chart, and it becomes a confirmation tool. But if you're uncomfortable with what needs confirming, it's just one more thing to confuse you. It's one more thing to think about. You will. Zeba, you will. But Zeba, I want you to change the wording. I don't want you to learn how to trade. I want you to learn how to read charts. Because if you learn how to read charts, you're going to recognize the advantages to get you into a trade. Does that make sense? Because what does your chart reading do, guys? Your chart reading teaches you to recognize momentum, to be able to identify it at a moment's notice. D, you're using the 13.2. to gauge momentum, to gauge termination conditions, and really to identify the overall trend of the market. And then D, you're using the 5-1 to take the advantages. Man, I'm telling you guys, learn to read the charts. You're taking the advantages presented on the 13-2. Those strong triggers, those no termination conditions. Remember the equation. Your chart reading identifies momentum. Your chart reading identifies a clear path. And then your chart reading on a 5-1 chart. Oh, where'd my 5-1 chart go? My chart reading on the 5-1 chart, D, is where I'm going to refine it and find the entry. And if you're brand new, guys, this is all you need, 2 charts. NinjaTrader 8D is actually just the next level platform. So NinjaTrader 7 is what I'm showing in the class. NinjaTrader 8 is just a different platform from NinjaTrader. Looks a little different, but the software is written exactly the same. So new users, embrace this. Advantages on the 13-2, entries on the 5-1. Read the, yeah, cool. Read the 13-2, enter on the 5-1. Guys, I'm going to tell you a true story about the way my brain works. If there is 1,000 pounds of information in front of me, I want to ingest it all on day 1. If there are 3 rules that I need to master, those are 3 rules that I try to master on day 1. It's a personality flaw, I think. I'm very much I need to know why. I need to get it. I need to understand it, and I need to be great at it. ASAFP. And the reality is it just doesn't work that way, guys. I don't know what your chosen professions were, but if you're a doctor, it probably took you 12 to 14 years to get there. If you're an engineer, it was probably 5 to 7 to really get to where you were qualified to do what you do. Even if you're a teacher, it took you 4 years to get there, right? So guys, don't be in a hurry. There's a lot of information. I want you to focus on being able to read it. See how those 1-to-1s create the bounce, push it up high. Focus on 2 charts. Focus on the advantages. And then the only thing I want you guys really worried about for 30 days is making sure that you never miss this trade. Making sure that you can find the best of the best entry, and then presenting that entry in class and having a discussion about it. I know I sound like a broken record, guys. I say the same thing every day. I don't know. Has anyone noticed that? The message never changes, does it? Strong triggers, no termination conditions, area for entry. I never change the message. Josh S., let's see what you did, bud. Strong triggers, right? I love this right here. Why did it turn? This is one of the greatest questions ever. Why did you think it was going to stop at the midband? Because you had odds favorable momentum, right? You thought that it was going to stop at the midband because you thought you had no termination conditions, right? And because you had an area of resistance inside of favorable large triggers. So Josh, there's only one thing that you left out of the equation with your reading. This is an area with the potential to break, but it hasn't broken yet, right? It has the potential, so 50-50. And then Josh, for people that are just getting their feet under them, one of the things that takes away the advantage on a 50-50 is when that divergence prints on the 5-1. That loss of momentum. And I think of rules in terms of advantages. What are the advantages that I have? Well, I don't have the advantage of a clear path. I have the advantage of a path that has the potential to clear based on momentum, right? I have momentum on my large chart, but my smaller chart is telling me that I'm starting to lose momentum on an area that hasn't yet broken. Does that make sense? Because sometimes the way I word things out helps me out. So divergence on the 5-1 says I'm losing momentum at an area that hasn't broken. So for brand new users, I think one of the greatest things that new users, until they fully understand everything, is don't be willing to give up 2 advantages, right? Don't be willing to throw away 2 advantages. Take pictures of everything, Josh. Take pictures of every 50-50 with divergence and look for similarities between them. And all this one did is it wanted to push up to the higher area. And that happens sometimes. But why does it happen? I've been showing this picture, right? Who's in control? It happened, Josh, because the crowd wanted it to happen. And I know that that's a horrible answer because it means that we have no control over the market. The only thing that we have control over is whether or not the rules are met. And if the rules are met, we still have no control over the market. We're still not guaranteed a winner, right? Because if something loses 80% of the time, or if something wins 80% of the time, mathematically obligated to lose 20%. But what the rules do is they create a statistical advantage. They create entry rules for a trade that typically wins more than it loses. So Josh, there's going to be times, even without that termination condition, that everything looks perfect. Let's see. Everything's going to look perfect, right? Small's above the large are wide, they're angled in the direction of the trend. Everything says go, right? Guys, do you see it? Rule 1 and 2 met without question. Beautiful entry at an area of support inside of favorable large triggers. Holy smokes, guys. This is the one that typically wins 70% of the time, right? 70% of the time. Josh, I took an ass kicking on it. And do you know what I said when I was done? Because my rules were met, because my execution was there, the only word in the English language that sums up how I feel about that is next. I triple dog dare the market to give me the same setup. I'll take it every time. Every time I'll take this trade without question, without hesitation, because this is a trade that wins more than it loses, right? So what is the value of the classroom? Guys, the value of the classroom is that when you think you had every advantage and you take that loser and you're saying to yourself, man, this is crap, I can't control the market. Well, you present the picture and we get to have a conversation about the little things that maybe you didn't notice as a newer user. Great picture, Josh. And I think that there's a good lesson in there. We don't control the market, right? The only thing that we're in control of is whether or not our rules are met going into a trade. And if our rules are met going into a trade, well, then we have an advantage. We have a trade that typically wins more than it loses. All right, Paul, strong triggers on the 13-2 here, right? There's your first entry right there. I love this entry. That's the one. Everything says down. That's a great looking entry. Everything says down. The smalls are working their way inside. And we've had 2 divergences, which means that we're probably at least taking out that previous pivot, right, Paul? And you said the 5-1 have to be outside, and you broke that rule because you wanted to get into a trade. So, Paul, your rules, I love this. Thanks, Josh. 2 divergences, small triggers inside, means that we're probably going to get a push a little bit higher, right? And where did it push to? It pushed right to 1-to-1s. Not a high probability trend trade anymore, but at least you're not getting in low. Paul, I think it was a great read. And guys, do you see where he said, I broke my rule? He identified the rule that he broke. This is an important part of annotating your charts. If you break a rule, you have to own up to it. Guys, I made a mistake. My rules say I should have waited. And I chose not to, and I lost the trade, because what that does is it reinforces that your rules are your rules and that you're going to follow your rules. Gary, divergence is everywhere on the 5-1. Divergence everywhere on the 5-1. Large triggers haven't rolled, so you're not looking for the HVA. I'm not sure what the 13.2 says, but this is a great picture. If this is going to be a bottom that stops the market, these trigger lines are going to roll. Gary knows that, and that was a good read, Gary. All right, Paul and Josh, thank you. You guys know that one of the reasons I'm so good at identifying mistakes is because I've made every one of them. I've made every one of them about 1,000 times, guys. And just like you, when I learned the software, I had to take pictures of the right trades. And just like you, when I learned the software, I had to present those pictures to John Novak, which I don't know if you know any. If you have siblings, it's terrifying to post your mistakes to your older brother who wrote the software because he doesn't hold back. All right. Paul says he's going to watch to see if this keeps going. He wanted his money, so he got out. Paul, you had perfect momentum, absolutely no termination conditions, nothing in the way. Rock star entry at resistance inside of favorable large triggers. Money on the first one, money at the fib, which is great. Bobby, I try not to hold back. I have the analogy. Guys, if all you want is for me to tell you that everything you're doing is wonderful and you can do no wrong, you're not going to get it because you're not going to get anywhere. If you want that sort of biased praise, grab your crayons, draw a picture, go put it on your mom's refrigerator. She'll tell you you're perfect. I want to teach you guys to read indicators. Paul, perfect trade, money all the way down. And then just like you said, you were just watching to see what happens. That momentum carries it all the way to the 1-to-1s. And if I'm not mistaken, those 1-to-1s made it bounce. Great trading from you guys today. George T, let's see what you did. Exact same trade, right? Odds favorable, nothing in the way. Pull back to resistance. Got in a little bit early. George, can I share what happened here with the class? I hope so, because I'm going to. You guys ready? And George, correct me if I'm wrong, because I have been known to be wrong. Usually it's just a mistake, but we're good. So George knew that his area for entry was probably this mid-band because there was a divergence and everything's going through, right? And the market's coming up, and George's order was right here. George's order was sitting right there. And that darn market didn't fill it. And it started back down, and George said, egads and little fishes, I'm not going to miss this trade. So he got in about 7 ticks, 6 ticks lower than the best entry. Totally cool. Guys, it's all right. But when this happens, you got to keep your stop in place. You got to wait for that reversal bar. He went outside of the window of opportunity and got high ticked. It happens, right? Stop where the market shouldn't go. If he had been in closer to the mid-band, it might have made it a little bit easier, probably. But that's okay. Here's the best part. is George said, holy smokes, every one of my rules is still met. I still have a high probability trend trade. Just because I took this loser doesn't mean that I'm not facing a winner. And he re-enters the market as it starts heading down again and gets paid on the way down. Sound about right, George? You were probably looking a little higher. It started to head down with advantages. You get in, high ticked. I hate getting high ticked, but it happens. And then I had an old motorcycle racer, guys, tell me once. He goes, the difference between a novice and an expert isn't your ability. It's your ability to recover from a mistake. It's your ability to recover when things go wrong. New users get stopped out and lick their wounds for 5 minutes. When you have the experience, you say, holy crap, Josh, this goes back to yours. I still have every advantage. I'm not in control. The market ticked me out, whatever. But I still have every advantage. I'm going to get paid on this trade. So, George, I love everything about this trade. I love the loser. I hate that you lost. But I love that you took a loser, and I love that you said, but all of the advantages that give me a trade are still full tilt boogie on that chart. I'm going to get paid for my expertise. I'm going to get paid for my chart reading. I'm going to get paid for all the hard work that I've put into this market. Nice job. Great trade. And guys, that's chart reading. That's chart reading put George in a position to get back into that market. Gary, same trade. Pullback, you waited for market flow confirmation. You get in. That confirmation cost you some ticks. Quick profits, getting out break even on the higher divergence. Nice job, Gary. And then Paul, let's see what you got. Same trade, right? Exit, exit, clear the area. Cool little pullback. Nice. Guys, look what Paul did here. The 13.2 said go. He takes his first short, exit at the trouble spot. The area breaks, right? Smalls are still outside a little bit. Paul says, holy smokes, this is a pullback back to resistance inside of favorable large triggers. My small triggers are still outside. And Paul gets paid again. Beautiful, Paul. Feels good, doesn't it? Guys, rules make the world go round. I sure do like watching you guys be successful. All right, Cal, great question. You're asking what this chart is? That's what's called a market flow chart. It's an 8-range chart, Cal. I want you to pretend like it doesn't even exist for 30 days. And then in 30 days, I'm going to show you how you can use this chart for confirmation. When Paul took this short, do you see how this chart has odds favorable momentum? Paul's using this 8-range chart just to give him one more level of confirmation on that momentum. And that's all that it is right now. And what happens is as you grow with your chart reading, you can add other charts. You can get more information because your ability to read your indicators goes up. But I can also tell you it's a slippery slope. Some people, I'm raising my hand right now. Some people, if they're given too much information, they begin to fabricate stuff. I am the epitome of that. Gary taking the exact same trade. Beautiful. Nope, you got out at the entry. Sorry. You had the trade over here, and then Gary, you took your third stop, right, at an area of resistance inside of favorable large triggers with no termination conditions. Guys, this is a great lesson on stop placement. Why do we put our stop where the market shouldn't go? Because if we put it where it should go, it's probably going to get hit, isn't it? Gary, I know you didn't want to give anything back, but your stop was on the wrong side of resistance with everything below it, wasn't it? And this is why having a plan for entry, having a plan for exit is so important, guys. Know exactly what you're going to do. Dave B, good morning. Dave B, perfect entry. Stop keeps you safe. You wait for the reversal bar. There's a little money. There's a little money. Dave B says, I can't be bothered with re-entering the market. I'm just going to go with momentum. And I'll take it all the way down here. Dave, what a beautiful trade. So many advantages, so well managed. And then everything says down with no termination conditions. You take the first entry. And then Dave B, here's a great example. And this is for everybody. I say Dave B because he posted the chart. Thank you for that, Dave B. Let's take a look. There's our entry on the pullback to resistance inside of favorable large triggers. I love it. Guys, the market comes all the way down to support and no trigger lines go through. Isn't that a great opportunity for profit? Identifying where the market is likely to go. And then Dave B, one thing that's kind of common, and maybe this is something that you can add into a management, is when your 13.2 reaches an area with the potential to stop the market, I want you to see divergence prints, a loss of momentum. Your small triggers are inside of the large triggers. And then more importantly, still, notice how no trigger lines broke through support here either. Dave B, your divergence was true on the third bar, which means that you might have been able to hold on to an extra $40 or $50 of profit reading that small chart as it comes into the termination condition. I hope that makes sense. You may be in a trade. Great trading this morning, Dave. What's the live market say? We haven't even looked at it, right? Loss of momentum. There's a lot happening in this picture, guys. I want you to see it. Are you ready? Oh, it's not chop yet. It's just figuring things out, right? Let's talk about the gap theory. What's the gap theory? The gap theory says that if price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, then it's going to snap back to the triggers. Guys, it's not a guarantee, but it's a pattern that we recognize. It's a pattern that you're going to see over and over. So price, meaning these price bars, pulls all the way back to resistance, right? I don't need the gap theory on this one because it's that two-part. Price reaches area, triggers below, no longs, right? Guys, it's a textbook termination condition. Even with the small above the large, I'm not going long. But guys, do you see how the large triggers remained a full bar away? There was room for a full reversal bar when it hit that area to come back to the large triggers. This is your indication that price is probably going to snap back. That recognition on its own should be enough to keep you from looking for longs right here. The termination should, but there's that second level that lets you know. And I took a picture this morning of that exactly. I took a before and after and put them together. Claire, I don't know if you're listening today, but I took this picture for you because you were asking yesterday. Price reaches that mid-band. Large triggers remain below, right? I'm not looking for this long trade right at the large triggers. And there it is after. Recognition of that pattern, guys, starts to eliminate some of these iffy trades. Recognition of patterns begins to put you in a position where you can also recognize advantages. A lot of talk in this hour, guys. A lot of chart reading. Great submissions by you guys. Thank you very much. I appreciate it. How we feeling right now? Claire, did you see your picture? Awesome. I saw that this morning. I was like, this is perfect. I'm going to give Claire one more picture because I feel like I owe you some for YouTube. But where were you this morning? Cameron had to remind me. All right, guys. New users. If you are anywhere between day 1 and 30, this is for you. All right, between days 1 and 30, this is for you. Also, if you're not winning more than you're losing, this is for you. If you're not consistently winning, this is for you. If you are chasing everything but want to get the best, this is for you. You notice how it doesn't matter where you're at in your trading, guys? This is for you. We're going to define entries because remember, 30 days, defining entries, recognizing advantages. You guys comfortable with that? How can you know what, Cal? If you're in your first 30 days? If you're not winning more than you're losing? Do you keep track of all your trades? I'll talk about how you can tell if you're winning more than you're losing. But first, let's do this, guys. I want you guys to write a plan. I want you to say, I'm going to give myself a trade that gives me an advantage. My trade will be the high probability trend trade. Personalize it. My trade is the high probability trend trade. Guys, I don't want you doing what John Novak does. I don't want you taking trades that Gary takes. I don't want you trying to be Mark Novak. I want you to be Cal. I want you to be Claire. I want you to be Dave. I want you to be Zeba. I want you to be you, all right? Because you're special. I want you to own this. Make this your trade. My trade, use that possessive language, is the high probability trend trade. And in order to enter the trade, which one of the gap, Claire? Here, let me give you a screencast link. But what you can do is if you click on the picture, it'll let you open it up in the browser, and then that'll get you a link to the picture as well. But there's the screencast link to it. When you click on the screencast link, it should come up. You can right-click and save image as if you're going to put it into a folder, or you can just take that screencast link and put it into your spreadsheet. So guys, my trade is the high probability trend trade. Why? Because this is a trade that typically wins more than it loses. This is a trade that has the potential to win 70 to 80% of the time. This is a trade that has those core advantages, those fundamentals that teach me to read my indicators, because this is a trade that's going to give me that chart reading ability to take me to the next trades. All I'm doing is focusing on entry, guys. 30 days. All I want to do is be able to get in at the right spot. Why? Because when I get in at the right spot, trades become manageable. So I use the words, in order to take this trade, in order to enter this trade, I must have the conditions of the checklist met. Guys, I'm all about gifts today. The rules can be met, Cal. So we'll get you there. I promise we will. So in order to take the trade, the conditions of the checklist, and CJ, I most certainly will, have to be met. And what I've just shared for you in the chat is the checklist. I put PPT, it should be HPTT. Trend trade checklist, guys. There's those rules. There's the conditions that get you into the market, okay? Take this one, print it out, put it on your desktop, and every time you take a trade, I want you to check whether or not they're met. And then for your computer, guys, here's the exact same checklist, but I stole pictures from the user guide. Is the market coming from a good top or bottom? Well, what is it? It's a termination condition that creates a full reversal. And I scroll down. Do I have odds favorable momentum? There it is. There's a picture. No termination conditions? Well, let's define termination conditions. And then do I have an area for entry inside of favorable large triggers? Pictures of everything. So guys, these are your first two gifts. Understanding the checklist, because the rules mean nothing if you don't understand them, right? So if you have a question about those rules, present it. Mark, let's talk momentum. Mark, let's go over entries. You know that I will. When the conditions are met, guys, I'm going to enter the trade. I'm going to take my entry at the best of the best area. I'm going to right click. I'm going to use a limit order, and I'm going to get into that trade. And guys, here's the big part. Take pictures of that best trade, right? Take pictures of those rules being met. Steal pictures from class. If somebody in class posts a trade and I go, oh my gosh, this is a high probability trend trade, rules met, steal their picture. Put some of those pictures into your plan, guys. You're writing a plan for entry. Commit to at least 10 pictures a day. Guys, I take about 20 to 30 pictures a day easily because that's 50 in a week. That's 200 in a month. By the end of 90 days of study, that's 600 pictures, creating confidence in your ability to read charts, right? That's a lot, isn't it? How can you not be successful if you're focusing this hard on the best of the best? Put a couple of them into your plan so that you can click on them and see exactly what they are. And then the second part, and Cal, this is how you know whether or not you're winning more than you're losing. From the spreadsheet that was provided to you when you downloaded software. And if you don't have it, let me give you a link. Here's your trade tracking sheet and instructions how to use it. Pretty cool, right? What's the trade tracking sheet? Well, the trade tracking sheet, I'll give you this link. This is your trade journal. Guys, even the CME recommends that you keep a trade journal. Everything that you do, you're going to track on this first page. Every time you take a trade, you're going to track it on the first page. Every time rules are met for a high probability trend trade, you're going to put it into the second page. You're going to put the picture in there. If I pull up my spreadsheet, Cal, how do I know if I'm winning more than I'm losing? Because I take a picture every time I take a trade, and I put the words won or lost next to it. I record it on my P&L, whether I won or lost. I talk about how I was feeling. If there's any notes that I need to make on it, I can put it here off to the side. Guys, this is your trade journal. This not only teaches you to recognize the patterns that make you successful, it also is teaching you to recognize the patterns in yourself. Maybe you trade into termination conditions. Maybe you're prone to break your rule about the small triggers being outside of the large on the 5-1. Maybe you're trading with multiple divergences into a 50-50 trade. This is going to help you identify it. And then every time my rules are met perfectly, guys, look at all of these perfect high probability trend trades. I can come back and study these every day to build confidence. So Cal, that's how you're going to know, is because you're going to study it every time. Entries are the first part, your first 30 days. Entries are getting you into the market at the best spot because what did we say? When your entries are correct, management becomes easy. And Cal, we'll go through the process of the limit order again just to kind of reinforce a little bit when the rules are met. The second part is learning to manage. And guys, management's going to take you 10 times as long as entries. Entries, you're going to have these down within the first 10 to 15 days. No doubt in my mind, if you're doing the study, if you're going back and circling those tails, entries are going to become pretty easy for you. The management part takes your ability to read those charts. So in the beginning, at the bottom of this example plan, I've put the most mechanical approach I can think of. And guys, this is an approach that leaves no room for opinion. This is an approach that leaves absolutely no room for anxiety, for hope. And I just posted this example plan in the room. Guys, I'll post it every day for the rest of your life, but take the time to write it. I will trade 2 contracts. So Ziba, you asked why 2 contracts? Here's why right here, because it's super mechanical. My initial stop will be 12 ticks, meaning that I'm giving myself room as I enter the trade. It'll be adjusted above or below the window of opportunity. You have to understand the window of opportunity for proper stop placement. When I get a reversal bar in the direction of my trade, it'll be moved 2 ticks above or below. Guys, do you see how there is no if I think the market's going to continue, if I hope the market's going to do what I want it to do, if it ticks against me, if it doesn't? This is like totally mechanical, methodical. We're not worried about the P&L in the first 30 days. We're worried about entries. I will take profits on my first contract at $100. Ziba, this is why we do 2, because when the entry is right, it almost never doesn't hit that first $100. What happens when you win $100? Dopamine kick, right? You get excited. Spoonie, great job. Perfect picture. Welcome to the class. Nice to have you in here. I want you to post as many pictures as you want for the rest of your life in this classroom. So Ziba, I win $100 in this trade almost instantly, right? I've got a dopamine response. I'm happy, I'm elated, I'm excited, and I've moved my stop to break even, which means that no harm can befall me. I've got my $100 and I have 0 risk. And then either it goes to my second target of 200 or I get hit for break even. So in the beginning, when I'm working on entries, all I'm trying to do is make, $300 out of a $200 move. The reality is while you're learning to read your indicators, you're probably going to catch a lot of $100 trades with break even, right? But it's not the management that's important in the beginning. It's understanding the perfect entry. The management will come because every time you take a picture of a perfect trade, that's okay. There are no silly questions. And Ziba, don't go anywhere yet because I'm gonna kind of reiterate something in just a second. Every great entry is an opportunity to learn about management. So every great entry that you annotate, I want you to go back after the trade and I want you to point things out. So in this one, I took the perfect entry, right? Odds favorable, no termination conditions, area for entry inside of favorable large triggers, and I took quick profits. Well, my next step is to come back from a management standpoint. When my large chart has odds favorable momentum and there's nothing in the way, it creates an opportunity for me to hold for the next area. Entries first, and then we'll begin to work on a management plan. And your job is going to be to post every picture that you take. So, Cal, that's what your software is. Open up NinjaTrader, get your software running. That's how we do it. NG, nice to see you. 2 divergences, not a termination condition, just a pivot. Right back to the mid-band. You have odds favorable momentum, you have strong triggers, and you take the perfect entry, right? Guys, do you see how he did this? This is such a great entry that it's virtually no risk. He takes $100 on his first contract, a lower divergence prints, and he exits the trade. And he doesn't lose, and he manages quickly, and then we're good. Cal, have you opened up your software yet? Have you clicked on NinjaTrader and got things running? Because if you have, we should have software up and running looking like this. And then your 13.2 gives you the information. Small's above the large, larger wide. 50-50 trade, right? Guys, on a 50-50 trade, where's my window of opportunity? From the highest point of support to the lowest point of support inside of favorable large triggers. Do you see how that just happened? Has 76.42 broken? Not yet. But it has the potential with this much momentum. My initial stop goes outside of the window of opportunity, typically 12 to 14 ticks. If I get a reversal bar in the direction of my trade, I'll move my stop behind it. If I don't get a reversal bar in the direction of my trade, if the market continues down and hits my stop, well then guys, this is one of my costs of doing business, right? There's my reversal bar. Now I'm 2 ticks below it. I've reduced my risk. First profit target at 100. Second profit at 200. Guys, my only concern was getting in at the area of support inside of favorable large triggers. I don't care what this trade does. I'm going to be mechanical. I'm going to be methodical. The only thing I'm concerned about is whether or not I got in at the right place, which means I should probably take a picture so I can show it to Mark and write my rules on there. Odds favorable met. Rule 2 is a 50-50, right? Potential to break, but not broken. It's not a high probability trend trade. Entry at top of window. Stop moved. Below reversal bar. I can annotate this chart and I can put it right in the room and get feedback. Still in it, right? Gary, let's see what you did, my friend. Everything says up, 50-50, pulls back to the mid band. Potential opportunity. Well, right here is more of a termination. You were letting it break. You had a market flow signal. Gary, you're spending so much time looking at market flow that you're missing the big picture. Very nice. Here we go again, guys. George, everything says down. Not the best momentum, but the smalls are outside of the large. Oh, there we go. Smalls below the large are above, 50-50. Perfect entry creates a manageable trade. Quick profits on the first one. See how he's break even +1 already because it's not a broken area. It's an area with the potential to break. How we doing here? Look at that, guys. First target reached. And now we're break even. Absolutely nothing bad can happen to us. How are we feeling about it? Okay, I got you, Gary. No opinions, right? I got in at the area of support inside of favorable large triggers. I took profits at $100 on my first contract, and then I moved my stop to break even. So I'm either going to hit 76.62 for a $300 trade, or I'm going to get stopped out break even. Do you hear how calm I am? Let's read some indicators. What does the 13.2 say? Strong or weak? Help me out, guys. Strong or weak on the 13.2? Anybody? Strong. What direction are my small triggers, my large triggers, my synthetic triggers, and my small triggers? Every chart has every indicator in the exact same direction, doesn't it? Doesn't that feel good? Guys, I've already got $100 in the bank. There's divergence on a 50-50 trade. Divergence on an area with the potential to break but hasn't broken. Guys, congratulations on a medium probability trade. No divergence, perfect entry, quick profits, out without a loss when we got a loss of momentum on an area that hasn't yet broken. Do you hear how I talk myself through everything that I see? Everything that I see. Where were the small triggers when divergence printed? Anything can happen, right? Where were the small triggers on my entry? Outside of the large. See the difference? No loss of momentum on an area with the potential to break. Loss of momentum on an area that hasn't yet broken. What a great management opportunity. There's no reason to lose on a medium probability trade once you're capable of reading your indicators. Guys, I'll never tell you to get into a trade, but we'll talk about your rules all day long so that you can recognize advantages. Gene, smalls below the large, larger wide, angle down, 50-50. It looks like you got in at the area of resistance. Your chart's off just a little bit. But look at that. Pull back directly to resistance inside of favorable large triggers. Quick profits on the first one, 50-50. Break even. I love it, guys. Isn't that exactly what we did going the other direction? There should be zero doubts in anyone's mind whether or not this works. Your job now that you know that it works should be to focus on learning how to get Sophia, all you got to do is post it. I got it. I love critiquing. Guys, we're coming into the last hour. After Sophia's chart here, I'm going to take a second. All right, Sophia, let's see what you have. You have smalls below the large. The large are wide. They're angled in the direction of the trend. So you're telling me that you have odds favorable momentum, Sophia? I agree. Termination conditions on the 13-2. You said that there aren't any, right? I see what you did there. No termination conditions. So that works out. I put no termination conditions here so that you can way down so you don't. But it's a 50-50 taking the best entry, it looks like. You're already in the trade from the mid-band. And then you've already taken profits. And you're at break even because it is a 50-50. And if divergence prints, you don't want to be in that trade. Sophia, amazing work. Picture perfect. You moved up target 2? Okay. Because you're starting to read your indicators a little bit, right? What said get out other than your fear? Was that crude oil? Sophia, what told you to get out other than being scared? So here comes the management side, right? All right. It wasn't fear? What is it? Well, Zeba and Cal, there's a video for you right there about getting in and out of the markets. So let's do this. Sophia, your order is absolutely beautiful. Does everyone see what she did? What George did? What Jean did? She identified her window of opportunity and she takes the trade right from the area. And taking it from the area makes it manageable, right? So Sophia, this divergence low right here This identifies your first trouble spot. Do you see it? On the other side of the large triggers. So when you get in, that's outside of the window of opportunity. Okay, so Safia, that's perfect. I'm going to say, did you get out at the area? Or just because it got near it? Okay, cool. Beautiful trade. So what Safia did is Safia nailed her entrance, right? She had momentum, everything's going, and it's good. And she gets in. And Safia, medium probability trade, right? Because the area hasn't quite broken yet. You recognize that, so you didn't risk it too much. You took quick profits. So remember that I said every great entry has a management lesson? So Safia, watch this. What does your 13-2 triggers say? Strong or weak? Strong, right? And you've already pulled back, and you've already got the entry, and you've got zero risk. So what does your 5-1 triggers say? At that first trouble spot, they're below the large still, right? That's a good look. Cool. So this is how management plans grow. When this has the best look ever for odds, for momentum, and price isn't smashing itself in anything, and these triggers remain outside, Safia, get paid right here. What you're going to learn to do is let that second contract run a little bit. And what you might say is, if divergence prints and this area still hasn't broken, maybe I'll take an exit. But you'll notice with that much momentum, we just got another entry for a high probability trend trade, didn't we? Great place to add on, or great place to move your stop behind as you let momentum try and carry you to the next area. Two trades, or one trade with an add-on, or a place to move a stop. But everything still says down, doesn't it? Every rule is still met for a high probability trend trade short. Guys, if you're brand new in the room, do you see it? Cal, I didn't get a screenshot from you. I'm not sure where it went. So what might change things on my 5-1 chart, guys? Maybe 3 divergences in the same place. Top of entry window should be top of synthetic triggers. Yep, absolutely. Let me show you the easiest way that I've seen to do it so far for you guys. Is Safia, there's the top of the triggers, and there's the bottom of the triggers. Do you see it? I like drawing a box while I'm learning, and I'll squish the top to the highest point of resistance, and I'll squish the bottom to the lowest point of resistance. And in this case, guys, you had, it's probably not in there, new trader. So where does my initial stop go? Just right outside of those trigger lines. Same thing here. From the top to the bottom, right outside of those trigger lines. And guys, momentum, here's your management, right? Momentum said we're probably making that blue line. That's how you get more out of a trade. Disappeared from where, Cal? Your capture software? Or did you try to post one in the room? That was 2 questions. Did you try to post one in the room? Just repost it. Take it again. So you took your picture, you had it, you clicked upload, and you copied that one, and then the most important thing is you have to paste it into the room. And that's what gets it to me. Let me scroll up. I had a couple questions here real quick. And Safia, I'm glad that you had an aha moment yesterday. You're going to have a million of those, I promise. And Safia, can I share with the class, you've been with us, what, about 40 days now? No worries, new trader. I'll give it to you. All right, Cal, take another one then. So guys, Safia's been with us about 40 days, 45 days now. And Safia, you're not perfect yet, right? Who was this? Was this Carl? Of course not. But 45 days in, it's beginning to click, right? Your entries look amazing. And now you're starting to work on some management, and you're still learning. 45 days in. Carl, this is beautiful. Quick profits on a 50-50. And he's saying with all this momentum and everything says down, I'm going to make a little extra money. Great trade, Carl. And you notice that a lot of people in the room took this trade. Why? Because they've got the repetitions, guys. They've got the study. They've moved forward with the software because they keep going through starting basic and working up. And Safia, I'm going to give away one more secret from you. When you're brand new, and this isn't unique to just Safia or anybody, when you're brand new, there's a lot of noise on these charts, right? What does this blue line mean? What about these one-to-ones? Well, what about this red line up here? Should I be worried about this mid-band over here? What about these triggers here? These one-to-ones, what's happening? And you're trying to process everything that you see. Guys, if you'll do me a favor, Cal, down here, there should be a yellow box. And when you hover over it, it says capture. Click on it, and it should bring up your capture software. Guys, what if all you focused on for 30 days was looking for odds favorable momentum? And if you get one of those tails, guys, even if you're doing historical study, get one of those tails. Does it line up with resistance inside of favorable large triggers? This is it, guys. That's all you need to focus on for 30 days is being able to take this entry. And if you get to the point to where you can take this one rules-based entry, everything else is going to work itself out. So if you're in your first week, if you just got your software and you're trying to do everything, reel it in. Try to do one thing. Take one bite of that giant elephant that is day trading and get great at your entries. Because would you guys agree? Great entries make it easy to manage a trade, doesn't it? I know you want to do everything at once. Let yourself be new. It's okay to be new. You're 30 days out from even beginning to feel super comfortable. Ziba, I know that was meant for you. Because you're all so darn smart. And I love that. You make my class exciting. 13.2 says we're likely to make it to support, right? Does everyone see that? Is there anything about this 13.2 chart that doesn't say that we have momentum to the downside? That area of support is a very likely place for the market to go? What could change that, chart readers? I have one divergence on the 5-1. I have two divergences on the 5-1. If I get a third divergence with those trigger lines inside, does that become a management opportunity because the market may push up a little bit higher? Do you see how it's nothing but chart reading? It's taking your lesson. Not for short or long, Safia. It's not different between short and long. What is your ATM set at now? You have 12 stops, right? Are you taking one contract? You're trading two, right? Trade 2 every time. This is an S&P one right here. Just take 2 every time. Safia, you're learning. Don't overthink it. Don't put that pressure on you. That's for the ES. And don't mess with management. Just let it do what it's going to do. And then go back and take those pictures. Keep focusing on entries. Because the management lessons are going to come in, right? And then if you go to crude oil, let me give you a picture of a great crude oil one. Guys, this is a great place to start. And you're going to end up someplace different eventually, yeah. But here's a good one for crude. This is a great place to start. And then as you grow with the software, so does your management. But I love it when new users don't even touch their targets. And then more importantly, don't move their stops unless they have a reason, right? And in the beginning, your reason, where is that example plan? In the beginning, in Safia, this is kind of where you're at right now. Take the pressure of having to read your indicators out of a trade right now. You know you got your great entry, right? Because now you're going to feel your palms get sweaty and you're going to adjust your screen and you're going to be nervous. I've been there. Let it be mechanical for a little bit. Let it be methodical. Take those great entries and let's go through it with the mechanical approach, Safia, from your trade. Okay? And we'll take a picture. If your entry was at 31, and I think it was somewhere right around there, that means that your initial stop, let's make it red. Ooh, Paul, there you go. You got botted. Your initial stop is outside of the window of opportunity. And then we're going to create 2 targets. One of them is going to be at 29, and that's $100. And then Safia, the second one, is going to be at 27. That's $200. We'll make it the color of money. All right, guys. Is everybody with me so far? Here's your entry in yellow. On the S&P new trader, yes. On crude oil, it's 100. So if we're breaking down the points from 31 to 30 is $50, and each tick increment is $12.50 to get us there. So 2 points is $100, 4 points is $200. All right, guys, so we're going to run through it. Safia enters right there at 40.31. Here's her entry. Once she gets into the market, her targets are in place because they're preset. Her stop is 12 ticks initially, which is actually 34 all the way up here. But she's going, you know what? I'll put it outside of that window of opportunity. So she's got about 2.5 points of risk rather than 3. Everybody comfortable with that? This is mechanical, no opinions. So we're going to wait for a reversal bar in the direction of our trade. And there it is. At the time of the reversal bar, I'm going to lower my risk to 2 ticks above the reversal bar. So now my risk is 4 ticks. So we've gone from 12 ticks initially to about 9 ticks out of the window of opportunity, and now we're down to 4 ticks of risk, $50 of risk. This reversal bar smacks right into her first target. Do you see it? Predetermined target. There's a $100 profit in the bank. That's Sophia's. That's dinner money. If you're taking the mechanical approach, guys, it says when the first profit target is reached, go break even on the trade. So now not only does Sophia have zero risk on the trade, she's already made $100. Is everybody good with this so far? Mechanical. There's no opinions. There's no wondering if this trigger up is going to mess things up. There's no wondering about anything. The market comes down, and I'm not doing a darn thing. Either it hits my target or it takes me out of this trade. And guys, there's the second target reached. I had zero opinions. The only time I moved my stop is when it was appropriate to move the stop because my rules said. And guys, this is that mechanical approach. But everything that you do with that mechanical approach, I know I'm a broken record and I apologize, revolves around getting the most kick-ass entry you can at an area inside of favorable large triggers so that the trade becomes manageable. So why do we say day trading's like eating an elephant? Because your first bite has got to be nailing that entry, guys. Commit to it. Don't worry about the money. The money is a product of the process. It's not the other way around. Do I have any golfers in here? I like the golf analogy. Guys, when I went out to the course, I would say, I'm going to get a birdie. I'm going to get a par. And what I didn't say initially was I'm going to make sure that my swing is solid. I'm going to make sure that my right elbow's in. I'm going to make sure that my left arm's extended. I'm going to make sure that I rotate my hips. I just said I want to get a birdie. And you know how many birdies I got? None. Because I abandoned the process for the want of the reward. When I began focusing on the swing mechanics and I started practicing them, going to the driving range, and practicing and creating repetition and muscle memory, well, guys, then the pars started coming. Then the birdies started coming. That's exactly what this checklist is. This is your fundamentals. This is your basics. Guys, in basketball, footwork, dribbling, shooting, that's the fundamentals if you want to be a solid basketball player. Let's see if we can make this bigger. Baseball, you've got to be able to hit, field, throw, and run the bases. If you can't do these basic fundamentals, you're never going to be a successful baseball player. Golf swing, grip, posture, stance, impact. Hockey, skating, stick handling. I try to get something for everybody. Guys, chart reading incorporates 3 essential elements. These are your fundamentals. 30-day focus on high probability trend trades. Dressage. What are the fundamentals of dressage? I imagine because you've got to control a 50,000-pound beast. Posture. So posture is important, right? What happens if you skip posture? Then the rest suffers. What happens if I skip momentum? Well, then the rest suffers. What if I trade in determination conditions? The rest suffer. So guys, I want you to think of the high probability trend trade as your fundamentals. That entry is your fundamental. And when you can nail that entry, everything else falls into place, guys. Everything else does exactly what it's supposed to do more often than not. And it went right to support, didn't it? So Sophia, do you see how a little trigger reading, a little chart reading, will take that $300 trade into an even bigger trade? But in the beginning, when you can't process all that right in the moment, keep it mechanical. Allow yourself to be new, even when you're getting those great entries. Start focusing on the mechanical side of management. Does that make sense, guys? I feel like I'm talking a lot and I'm not listening as much as I should, maybe. And I want to make sure that you guys are with me. So post in the room. Have I missed any charts? We did the ATM strategies. Paul posted a chart. Paul takes the most beautiful entry, right? Absolutely picture perfect. Got paid on the first one. Left it at break even to drop off, baby, and it made it to the target. Paul's 13.2 said he was making it to the target. Paul, great trade. Absolutely beautiful. Gary says that he's rigidly following his rules today. He's embracing the process. Is there anyone in this room that would be mad about 100% winners and $1,000 in profit on 10 trades, which is probably 5 trades on a 2 lot or maybe 3? Thanks, D. They're going to keep getting better. The more questions you guys ask, the better the class gets. Do you realize that? Can it be done? Guys, look at Gary's picture. Gary started the same place every one of you started. And the phrase that went with 100% winners is, I rigidly followed my rules today. I embraced the fundamentals, and it works out. And Ziba, you're absolutely right. Questions create engagement. And engagement lets everybody know that it's okay to have a question, right? There's no silly questions. So let's chart read together, guys. Odds favorable or anything can happen on the trigger lines here. Yeah, it is, isn't it? Anything can happen. And new trader, you're absolutely right. We reached support. Trigger lines haven't gone through. And new trader, thank you for posting that because we're going to talk 50-50s for you now. No momentum. Smalls inside of the large. No momentum twice, right? Is there any reason to forfeit the advantage of momentum, especially at an area with the potential to break? Gary, it makes a difference, doesn't it? No momentum, no momentum. Rule number 1's met, no trade. I took the same picture earlier. Guys, remember when I said I take about 40 or 50 pictures a day? Gary, this was for you because I know that you're watching edges. I'll also take pictures for you guys when I know you're practicing stuff. Rule number 1 wasn't met in this picture, right? Look at how pretty that entry looks for a high probability trend trade. Guys, take pictures when your rules aren't met. Talk about the rule that wasn't met. Talk about the advantage that you gave away and show the result. No momentum, no momentum. This thing gets stopped out instantly. No momentum. This thing gets stopped out instantly. All right, new trader, we're going to take a picture of a 50-50, okay? I almost hit the power button instead of delete on my computer. That would have been funny. All right. Are you ready, Noob? And guys, this is for everybody. Let's go through the process. Let me back it up. All right, here we go. We're just hanging out. I've got a great termination condition. Things look good. And that market's pushing down. All right, new trader. Price reached support. Absolutely none of the trigger lines have broken through. Does everybody identify this as a termination condition? Let's get the distraction off of there. Cool. So right now the area hasn't broken. No short trades. And this market continues down, new trader. And now the small trigger lines, whoops, let me pull it up. The small trigger lines have broken through the area. The large trigger lines have not. But here's the important factor. Are you ready? Do I have odds favorable momentum when the small triggers go through the area and the large have not? Yes. So guys, this, and I'm going to give you the picture, and I'm probably going to type a little excessive on this. Smalls through the area, the larger not. This is a 50-50. And guys, it's not a 50-50 because of your odds of survival. It's just 50% of the triggers are through, 50% are not. Hey, Yuri. This is an area that has the potential to break, but has not broken. The key to this look is odds favorable momentum. Because strong triggers break things. And that was 2 typos in a row. Sorry about that. All right, so new trader, small trigger lines break through. Large trigger lines remain above. Odds favorable momentum says that this is an area with the potential to break, but it hasn't yet broken. My path isn't clear yet. Are you with me? The market continues down. And now the large triggers get below. The small triggers are below. So right here, we have a 50-50 trade. With that good top, with that full reversal, with that odds favorable, I like this trade. But if you're not taking 50-50 trades yet, well, there was your trade with the clear path. So new users better not miss this one at 28, right? Because that's every rule under the sun. As you grow with the software, you're not going to miss this one either. And it comes back down, and some of you might even catch that last-ditch effort to get into the area. So area with the potential to break, then just take it. New trader, that's okay. Then this is your plan for the first 30 days. But I want you to understand, and what I said, and I said this a lot in the beginning, and I think I aggravated the hell out of my brother, is I would say, not my trade, not my trade, not my trade, and I would never work at making it my trade. This first circle has odds favorable. It's coming from a great top. It has every advantage of momentum, and it also has crazy strong triggers and a small window of opportunity. I would never miss this trade now. But there was a time, new trader, when I said, you know what? Not my trade. And if this one didn't come to fruition, well, then I just watched the market go straight where we knew it was going anyway. So focus on this trade, and all of the advantages that you see are going to carry you to that next one eventually. Some people think because they skip medium probability trades, they're going to win more. Not necessarily. You're missing out on opportunities for money as well. And your chart reading will tell you when it's okay to take that risk. Does that help a little bit on the 50-50? And then Yuri taking the same trade. Yuri waited for confirmation, gets paid, re-enters, gets paid. Yuri, great trading. Good top, termination condition, creates a full reversal, provides odds favorable momentum. Yuri takes the pullback right to the area. Yuri, once again, nice trade. And it looks like John Novak took the same trade. Gets that full reversal. The 21 says everything's going up. So John said, I'm going to take quick profits because of my chart reading. Nice trade, John. Great reads. And then Gary, let's see. Did you follow rules again? It was a 50-50 with confirmation, right? Coming from a good top, everything says down. Confirmation prints, but the window was too big. No worries. So Gary, you want to talk about If your window is too big, here's your window, right? You're saying from the bottom of the triggers to the top of the triggers, those 1-to-1s. Do you see how your confirmation comes from within the window? Right at the HVA, right after the termination. So Gary, this isn't even a 50-50. This is an HVA trade. This is a termination, perfect to the point. All of the trigger lines roll, and there's an HVA line right at the small, right at the large. That's your entry. And then if you're waiting for the confirmation, your confirmation from that HVA gives you an opportunity. But I like that you recognize the split between the triggers, the potential to pull up. It's a nice trade. It's a good read. But it's an HVA. And you like that HVA line to be at the large triggers on the 8 range. Why? Because price loves to close the gap to those triggers. Great job, Gary. Your reading has really gotten good. Anything can happen, right? The smalls are outside, but anything can happen in an unbroken area. You take the entry outside of favorable large triggers. Take quick profits, higher divergence, get out, break even. Yeah, you may have stretched and snapped them a little bit, Paul. That's about as ugly a look at an area that you could get. And it goes back to what we were saying, new trader. Odds favorable going into an area. Areas are likely to break. Weak anything can happen triggers, man, you give away those advantages. Very well managed, Paul. Cal, were you able to get your capture software up? 3 divergence, 1 is lower. Does that negate the 3-bar rule? It doesn't, Dave B. 3 divergences in the same location may terminate the trend. What it is that it may terminate the trend, right? Not guaranteed to terminate the trend. What was the momentum? The momentum said down with strength, right? And we hadn't reached an area. The fact that they're still going lower, it helps. But you've got anything can happen triggers. You're a couple ticks off. Cal, this is Dave looking at a couple different time frames. Everything that we teach, Cal, your entries can come from 2 charts. And that's your best of the best initially. So the patterns that we teach them on these 2 charts because they happen the most often. They flow smooth. Dave was also looking at what's called a 21-3. So like the 5-1 is a smaller, faster chart of the 13-2. The 13-2 is a smaller, faster chart of the 21-3. It's just using a different time frame, a higher time frame. And then the 4th chart that he was showing is what's called a market flow chart. And once again, this is more of a confirmation tool. There's our circles for the high probability trend trades. Notice that it had strong triggers. Notice that it had strong triggers. So you can use it as a confirmation tool as well. So Cal, as you grow with the software, you're going to be able to adjust to your preferences, whether it is Safia, no ma'am, not yet, no reason to. As you grow with the software, Cal, what you'll find is you'll be able to add to it. You're in a constant state of growing. But the key is master. Be so comfortable with 2 charts that you don't have to stop and think, that your analysis becomes instant. You should be able to look at these 2 charts right here, guys, and say anything can happen at support, divergence prints, higher divergence, another higher divergence. I'm not taking shorts. It's too soon for longs. Probably going to push up higher. You should be able to do it that fast. Oh, don't be sorry, Dave. And that's a great point. You can use a 21-3 to do something else, maybe bigger moves, bigger options, key areas. But if your analysis isn't instantaneous on 2 charts, don't add another chart to confuse you, right? Too many minds, paying attention to too much stuff is only going to confuse you. Guys, I keep this room as simple as I know how. Strong triggers, quick entry, quick profits, closes the gap to the large triggers. You take that next entry, quick profits. That's some great chart reading, isn't it? And it all is led 13-2 momentum. So Cal, I want you to know you're destined for great things. But let's keep it simple first. You're wondering if Claire went long there? She may have, Paul. She might have taken that momentum trade. But with everything below those areas, man, that's a risky trade. Unless there's something going on somewhere else. Yeah, mine either. Not my trade either. Still can't get your screen capture on. All right, Cal. Do you have the yellow icon down here in your toolbar? I like it. And Cal, these are great questions, and these are just teething problems as you get comfortable with everything. Give me a Y or an N in the room real quick, Cal. Do you have that icon down there in your toolbar? Yes? Cool. So what I want you to do is I just want you to click on it one time. And you said that you had 2 monitors, yes? So it might be, okay, you've got it? Perfect. Take a practice picture. Click that capture button. Click your left mouse up at the top and drag it all the way down to the right. Snap a picture. And just keep practicing. Guys, even if you don't have anything, if you get in the habit, draw arrows at stuff. And maybe Claire said, nuh-uh. Not her trade. You know why? Because Claire says that when every trigger line is below an area, it's not a good one. Can you take the picture, Cal? Can you click the red button? And then don't worry about click and drag. Just click your left mouse one time. And it should give you this right here that says camera, video, start over, cancel. Click on the camera. And then that's going to show you the picture that you just took. Are you clicking the button and it's not working? Because one of the challenges from where I'm sitting, Cal, is I can't see what you're doing. I do know that your salesperson can get on your screen with you after class and help walk you through this process a little bit and make it easier. And it's repetition. But from here, I'm not sure how to troubleshoot you. Just because I can't see what's happening on your screen. And I tend to not take over people's screens. But your salesperson certainly can. The tech person can and will. And they'll get you in a position that'll help you out. Guys, if this is really going to be a turning point in the market, these triggers are going to roll. Awesome. And Cal, I want you, and this is for everybody, not just you, Cal. It takes a couple days just to get the mechanics down. It takes a couple days just to feel comfortable with going through, scaling your charts, moving things around, getting them back to where they need to be. Bump them out of place. Get them back into place. Work on these silly little things, right? Not necessarily. It could, new trader. It has the potential to, doesn't it? What direction is the trend right now based on the 13-2? It's green up. Do you have odds favorable momentum to the downside? You can't because it's up. So in new trader, this is one of those things. I think it aggravates John sometimes. I love language. This is where, when there's nothing to do, I like to play the if-then game. And I'll show you exactly what I mean. Let me snap a picture of just the 13-2. Instead of saying market's going to continue down, or instead of saying the market's going to go up, what I'll say, and maybe this won't help you guys like it does me, if small get above 40.22 with odds favorable momentum, I'll look for a long opportunity per the rules. So what I'm doing is I'm not saying that the market's going to go up, but what I am saying is that if it does, if things roll, this is going to be my option. If all triggers stay below this area and I get odds favorable momentum, I'll look for a rules-based short. So what I'm doing here, guys, is I'm not creating an opinion about what I think the market's going to do. Because if I do that, what's going to happen is I'm going to start creating an opinion about what the right entry is. I'm going to start creating an opinion about maybe what I see on the 5-1. Well, I see support, so I'm going to go long. Oh, I see resistance, so I'm going to go short. And this is just a trick that works for me, and it may not work for you. And guys, that's not a rule. That's not anything other than the way my brain works. When I get into a situation where I don't have my rules met, I'll start playing it out in my head. I'll start saying, well, if this happens, then I have an opportunity. And if this happens, then I have an opportunity to do this. And what you'll find is you'll start going through your head, new trader, Cal, Zeba, you'll start working out what the rules are and what you need to see for them to be met. And it just further reinforces your attention to always taking trades that give you an advantage. One more picture here, Gary. Gary, you say not good enough for an edge trade, but it was there. Awesome. And Zeba and Cal and all of you guys that are new, I say it at the beginning of class. I'm going to say it again at the end of class here. Let it be simple. Let it be simple. Because the more you try to create, the more you try to define, the harder it becomes for you as a new user. So focus on odds favorable momentum. Focus on no termination conditions. Focus on those entries. And I promise we'll work every day to get you where you want to be. But the people that get to their goal the fastest are the people that simplify. Gary, you have a termination condition that created a full reversal with odds favorable momentum on the 21. And the 21 is strong up, which means that there is no edge trade. Gary, there's a big difference between edge and counter trend trade. And I think that it's important as you begin to look at edges that you realize that. Edge trades, and let's go back to the one that I took this morning for you. And Gary, I love that you post these, right? Because this is how you get to where you want to be. Tell me what you see, and we'll talk about it. So here's the edge trade that I looked at this morning. So on the 21, Gary, no termination conditions. On the 21, odds favorable. On the 21, the area likely to hold, right? So with this look, just like we're looking for a trend trade, and this is how I want you to think of it, Gary. An edge trade on the 13.2 is nothing more than a trend trade from the 21 with odds favorable and no terminations. This is your area for entry. This is the area likely to hold. This is the area likely to hold. Does that make sense? And guys, this is advanced. This is advanced chart reading. And Gary, I took that trade 1,000 times and got run over fighting trigger lines. I got run over 1,000 times fighting the trend. So, guys, Stay on the right side of things. Read my favorite book. My brother wrote this book. It's called How to Commit Financial Suicide in One Easy Step. Trading Against Strong Triggers. Chapter 2 is They Trade into Termination Conditions. How to Commit Financial Suicide. Based on a true story, guys. I love it. This one always makes me laugh. This is it, D. That's the whole book right there. Put it on your desktop. You'll notice that it's only one page of information. All the other pages are blank. And if they're doing it, warning signs your friends are in trouble, seek help immediately. Guys, I'm that help. I'll help you recognize it. Funny story on the same page. John Novak had a broker tell him once, he goes, "Hey, John, I can guarantee you $1 million in your account." To which John replied, "Really? How are you going to do that?" He goes, "Just fund it with 2 or 3 million and fight the trend." He goes, "You should be down to $1 million by the end of the year." And there's some truth in that, right? Absolutely not, Indu. Are you talking about a short or a long? So Indu, and okay, this is how we're going to end class today. We're going to go back to the definition, and this will help you a little bit. A medium probability trade, Indu. I love that you posted that because, gosh, this is a great lesson. A medium probability trade says that all indicators line up for a trade. Most indicators line up for a trade. However, one small issue exists, right? Are you with me on that? Most indicators line up, but a small issue exists. Cal, have a great afternoon. Thanks for being here today. So watch this, Indu. What's the trend overall? It's up, right? So there's one issue. Do I have odds favorable momentum? Absolutely not. There's 2 issues. Termination condition. There's 3 issues. I don't have favorable strong triggers. There's 4 issues. So if we're going off the idea that a small issue exists, do you see how, no matter what you're thinking in your head, a little bit of chart reading helps you identify an awful lot of things that could go wrong with this trade? Does that make sense to everybody? It's the difference between opinion and chart reading. Opinion costs me money every time. Chart reading tends to keep me on the right side of things. So remember that medium probability, and Indu, that may be one of these. The small issue that may exist is that I have a 50-50 trade. Just one small issue. Or maybe I have super crazy, everything on the 13.2 is right, but I've got 3 divergences that are going lower on the 5-1. And my issue may be that it's losing momentum, but I still have all those other advantages. And guys, that's what chart reading is teaching us. Chart reading is teaching us not to try and catch every trade, but to wait until the market gives us the advantages so that we can catch the best trades. And then your plan will go from there. Dollars to donuts, your plan will grow from there. Guys, I ran over today. I skipped a break. Holy smokes. Great class. Thank you so much, everybody, for the questions. Thank you so much for the participation. If you're feeling overwhelmed, it goes away. If you're feeling confused, it goes away. Guys, it's your participation that gets you over that hump. So keep going. Gary, you've got one more chart. Do you need feedback or are you showing off, mister? I got you. Hope when rules are not met. Amen, Claire. Hope costs me a lot of money, guys.